All right, happy Friday. So this is a part of Financial Fridays call that we have. Normally, we're going through finances, working on savings, budgeting, and stuff like that. But for today, for this Friday, one of the things we're going to talk about though is different. We're going to focus on hedge funds and especially BlackRock, right? So that was one of the topics one of the members said we should talk about today. So yeah, yeah. I mean, it's hopefully if you guys haven't watched it, so we're just gonna watch a video on like BlackRock and another video on hedge funds. Pretty much, because we got to notice stuff as well, especially us being in the markets, right? Most people don't even know what BlackRock is and how they pretty much control the world. Most people think it is just Trump, but in the reality, it's like a company, pretty much hedge funds like BlackRock, State Street, and Vanguard. Like they own like 40% of like every stock you could really think of in the world, So it's important to notice information. The thing is, this video might be long, so you don't have to stay for the whole thing. Once you get the point, you could go, right? But yeah, I enjoy watching stuff like this as well. It's good to know, right? So I enjoy watching this stuff. So hopefully we'll watch it together and and see if y'all enjoy this. We could do more of this as well. Cause that's what I like watching is like stuff on hedge funds. I like to understand biographies on hedge fund owners and stuff. So if you guys are like this type of information, we could continue to watch this as well. But I think I have like two videos that's not that long, and like the longer one, it's like, damn, it's like an hour. I don't think we're gonna be able to go through that. But if you guys are interested, we'll just sit there and chill out, right? I ain't doing nothing else today, but yeah, let's just get started with this one first. So we're gonna look at how BlackRock, the company that owns America. So you can listen out. This guy is really good. Jack is Jake Tran. So he actually does the documentaries. But if you guys haven't watched it, probably after this, you most definitely should follow these people so you could at least get more information, especially when it comes to the financial markets. So you could literally see how good and also how fucked up it is, right? So it shouldn't be a surprise to us. But yeah, Oscar, man, I hope you enjoy it.
Major financial institutions have teetered on the edge of collapse, and some have failed. As uncertainty has grown, many banks have restricted lending, credit markets have frozen, and families and businesses have found it harder to borrow money. We're in the midst of a serious financial crisis, and the federal government is responding with decisive action. So I propose that the federal government reduce the risk posed by these troubled assets and supply urgently needed money so banks and other financial institutions can avoid collapse and resume lending. This rescue effort is not aimed at preserving any individual company or industry. It is aimed at preserving America's overall economy.
In January issue, the bailout was far bigger than the Federal Reserve let the public or even members of Congress know at the time.
During the 2008 meltdown, when the government bailed out too big to fail giants like Bear Stearns, AIG, Fannie Mae, Freddie Mac, who did they hire to analyze and clean up the mess? Another giant financial firm by the name of BlackRock, led by a very well-connected billionaire by the name of Larry Fink. BlackRock was awarded these key government contracts to help with the meltdown with no competitive bidding while being enveloped in secrecy. Basically, Larry Fink was hired to be the manager of Washington's bailout of Wall Street.
Yeah, so most of us don't know that because remember in 2008, right, the housing crisis, nobody even knew what a central bank was even after, like before that. So once all of this started, like that's when they realized bailouts. They're like, how is that going to happen? Oh wow, you're just giving them money and doing bailouts. Who was going to do it? And that's when the central banks started coming apart, right? So remember that nobody really knew about central banks probably before 2008, but BlackRock was the institution that was dealing with the financial crisis. So just remember that all those companies that was going under, BlackRock was the one that our government used BlackRock to deal with the distribution of money and then just control all of America's finances at that moment. Crazy shit. Yeah, I wish I bought. Yeah, yeah. Because if you watch the movie, because his question, his he said, "I wish I bought a house in 2009 too." Yeah, because before that, like they were just giving out homes to anybody. You know, it didn't matter your income, it didn't matter your credit. Like if you applied for a home, they was giving you a home. Like there was people making 30,000 a year living in a probably a $800,000 home. It was crazy. But yeah,
Even though BlackRock is one of the biggest shareholders in the same banks they were helping to get bailed out, making Larry Fink the most powerful man in the post bailout economy. Fast forward to the 2020 pandemic.
Rick, quick question for you, sir. We're just getting word from the Federal Reserve, and this might be boosting the markets even more this afternoon. They are talking about the details of their corporate bond purchases.
The Fed making history today, and for the first time ever, began buying corporate debt ETFs. The unprecedented move driving an explosion in the corporate debt market.
We are committed to using our full range of tools to support the economy and to help assure that the recovery from this difficult period will be as robust as possible.
But again, as I mentioned, the Fed 2 weeks ago began buying individual corporate bonds, and we just got granular detail about what types of purchases it made yesterday.
And who did the money printer of the US, the Federal Reserve, hire to manage their scheme to buy corporate bonds? Basically, they were bailing out corporations that had too much debt to withstand the pandemic. You guessed it, they went right back to BlackRock. Even though, again, the same corporations BlackRock was helping to bail out were the same corporations that they own some of the biggest stakes in.
So let's talk a little bit more about how it works, right? So we were talking during the break. You guys own around.
Keep in mind, though, these are just the top 10 holdings. The whole list, which the Fed has published on the New York Fed website, includes 794 companies. So yes, these are just the top 10 by holdings, but there are hundreds of other companies that could be part of the Fed's portfolio as well.
Larry Fink was the most.
so think of that. So if you knew that BlackRock, like that's why what I was saying, that BlackRock is the US government. And the next video is going to break that down, because remember what I was telling you guys, right? I think it was sometime this week that all of these people, they all go to the same colleges. They go to the same, they work at the same companies. Like they will go to Yale, they'll go to Harvard. Then these people will work at BlackRock, they'll work at State Street, then they will work at the White House, they'll work for the government, they'll work at a bank, then they'll go right back to BlackRock, then they'll go to work at the White House again. That's how they're doing it. And they're doing this in a massive scale, right? So when you see like, oh, that BlackRock is about to be one of the top holders of a company, you automatically think, okay, that's a bailout. Like, oh wow, so it's impossible for that company to go bankrupt. So at that time, BlackRock was buying the assets under the US government.
Most powerful man in the post bailout economy, and now he's arguably one of the most powerful men in the post pandemic economy as well. And yet, despite all his considerable power, the general public has practically never heard of Larry Fink, with BlackRock barely coming into the public eye during the recent claims that they were buying up single family homes. That's because Larry is smart. He's intentionally kept it that way. He spent the last 33 years building BlackRock into the biggest asset manager in the world, with over $9 trillion under their management. Not billion, trillion with a T. Today, BlackRock's clients include the retirement accounts of average everyday people in the form of pension funds. They also have sovereign wealth funds as their clients, other central banks, college endowments, Fortune 500 companies, and millions of individual investors. They're one of the top shareholders of many of the biggest publicly traded companies like Apple, Microsoft, Facebook, and even other major banks like Wells Fargo and Chase. And to put their $9 trillion into perspective, the 300 largest pension funds in the world only hold a collective $6 trillion. Vanguard, the behemoth behind mutual funds and ETFs, trails behind BlackRock with only $7.1 trillion under management. And if you put the big three asset management firms together, BlackRock, Vanguard, and State Street, they control a collective $15 trillion, roughly equivalent to nearly 70% of the US's GDP. And Larry Fink has done all of this largely in the shadows, with just a few occasional interviews and appearances on CNBC. He's like the Wizard of Oz, the man behind the curtain. As William Cohen puts it, a former investment banker and author of House of Cards, an account of the Bear Stearns collapse. This is BlackRock, what some call the most influential financial institution in the world's largest shadow bank, and perhaps the company that owns the world. When Larry Fink was asked by Bloomberg if it's true that he's the most powerful man in finance, the man responsible for $9 trillion tried to convince you otherwise. That quote, "I don't think of myself as powerful," end quote. Is that true? Does BlackRock own the world? Well, it's a little bit complicated. BlackRock boasts some impressive stats. In 2010, they were called the most influential financial institution in the world. And in 2014, they had $4 trillion under management, making them the world's biggest asset manager. For comparison, the Industrial and Commercial Bank of China only had $3 trillion at that time. And as I just mentioned, their assets have doubled to more than $9 trillion over the past 7 years. It seems BlackRock has a hand in nearly everything these days. They're a top shareholder in some of the world's biggest publicly traded companies.
Yeah, now they're managing 14 trillion. So now their assets under management is $14 trillion.
A top shareholder of banks like Deutsche Bank at 4.81%. In 2020, they were approved by the Chinese government to set up a mutual fund in China, making BlackRock the first foreign asset manager to be greenlighted for this. They also have shares in companies all over Europe, including industries like energy, oil and gas, transportation, food, and of course, finance. And here's the kicker. BlackRock has what's called circular ownership, where they own shares in companies that own shares in BlackRock. Definitely not a conflict of interest. So they're literally everywhere. Because of their staggering size and power and the fact that they largely operate out of sight, BlackRock has been called the world's largest shadow bank. The question is, what makes someone build something this big? Larry Fink is known as the guy who always wanted more than he had. Friends have called him obsessive, paranoid about maintaining control. He's been regarded as someone who knows the markets inside and out and understands business backwards and forwards. But it took him a massive $100 million loss to get to this point. Larry majored in political science at UCLA and got his start on Wall Street at age 23. Having that edge in politics would later play a crucial role in him being the de facto middleman between Washington and Wall Street. He received offers from some of the top investment banks, but decided on First Boston, where he worked on structuring and trading bonds, which sounds incredibly interesting. He rose up the ranks quickly, and within a decade, he became somewhat of a legend on Wall Street by helping develop the debt securitization market, where loans like car loans, credit card loans, mortgages would be bundled together, sliced into pieces, and sold to.
But just remember, like he lost $100 million. So that's how he was known. That's how he started out. He lost big first. So he failed first. He lost a shit $100 million. And he was actually like considered the laughing stock back then. Like he put a company under type of situation.
To other investors. If this sounds familiar, it's because these are the same mortgage-backed securities that led to the 2008 meltdown. But before that happened, this securitization of debt was considered really innovative, and it transformed the face of finance. All of a sudden, if you're a giant bank or pension fund or whatever that wants to invest in the housing market, you can now invest in a mortgage-backed security made up of thousands of hopefully safe loans. Larry Fink created one of the main tools that led to the meltdown, and he was also the one the US Treasury hired to clean it up. His interest in policy and strategic wizardry helped him gain a reputation as a true investment mastermind, and for that he was rewarded. Larry was making bank and received a ton of accolades. At just 31, he became First Boston's youngest managing director in history. Many even thought he would go to run the firm someday. In total, he helped add about $1 billion in assets to First Boston's bottom line. But then, the rising star came crashing down. Shortly after one of his biggest wins, Larry lost $100 million for his company. A missed call on his hand resulted in trades being wiped out, as well as the hedges designed to offset those losses being wiped out. And overnight, Larry went from a hero to a toxic asset that should be avoided at all times. He was ostracized, his reputation went up in flames, and his colleagues wanted nothing to do with him. He was forced out of the company he spent 12 years making around $1 billion for. While a catastrophe like this might mark the end for many people, that wasn't the case with Larry. Instead, he used it as ammunition, vowing to never find himself in a position where he didn't understand the risk he was taking again. And in 1988, he was 35 and hell-bent on rebooting his career. So Larry co-founded the Blackstone Group, along with now billionaire investor Steven Schwarzman. They started off with a $5 million line of credit. Fast forward to 1993, and they were crushing it with $20 billion under management. But in what some would call a power struggle between Fink and Schwarzman, where two super strong personalities collided, the two parted ways and Larry broke off to found BlackRock, channeling all his pain and trauma into growing the firm at a staggering rate. By 1999, it went public for $375 million. By 2004, it merged with Merrill Lynch, adding $500 billion to BlackRock's assets, and today it's at $9 trillion. While the size of BlackRock is impressive, what really sets them apart is their software platform called Aladdin, basically a supercomputer they use for their clients. Aladdin is a network of 5,000 computers BlackRock uses to monitor millions of trades and analyze their clients' portfolios 24 hours a day to perform risk analysis. Aladdin is so widespread today that it's basically the central nervous system for many of the largest players in
Yeah, so when we talk about algorithmic trading, that's one of the things that they're using is Aladdin, and BlackRock pretty much owns it.
The investment management industry. And for them to be able to offer the service, they have to be granted access to sensitive data from banks, insurance companies, pension funds, and other important institutions all over the world. This high-end computer farm literally goes over every possible scenario and pinpoints anything that could possibly go wrong, allowing their clients to make the best investment decisions. And it's through Aladdin that BlackRock actually oversees more like $21 trillion worth of assets instead of just 9 trillion. And that's just from a third of Aladdin's 240 clients. Which means that one company, BlackRock, has an eye on the equivalent of at least 10% of all the stocks and bonds in the world. 2008, the world enters a global financial crisis that hasn't been seen since the Great Depression, and Wall Street needs Washington to bail them out. Who do they call to manage the bailout? As you already know, BlackRock. The New York Fed personally went to Larry to help manage 30.
Yeah, like does it make sense now? Because we got a new Fed chair and they're trying to hire outside sources to pretty much make like come to a conclusion about the data. So who you think they're going to choose, right? So it's like if the government was doing this the whole time, picking hedge funds to control like just the our tax dollars, control the United States assets. So like who you think they're going to go to when it comes to analyzing the data for the US, like the task force that Kevin Walsh is thinking about. So obviously it's going to be somebody familiar in these companies. So when we hear the names, like we just got to figure out the names of the people of the task force, and then most likely they're probably been around the same circle. We'll figure that out.
$1 billion in toxic assets from Bear Stearns. They brought BlackRock in to advise them on how to handle the $100 billion of toxic assets from AIG. They even contracted BlackRock to deal with the $301 billion of Citigroup's assets, all of which were done behind closed doors with no competitive bidding. And just like that, Larry was more powerful than ever. He went from being the laughingstock of finance to being the linchpin between Wall Street and Washington. As one bank executive said, Larry has always wanted to be important, and now he's more important than he ever dreamed of, and he's loving it. In the end, they made at least $200 million off of these contracts in total. The massive size of these contracts, the secrecy surrounding them, and BlackRock's enormous influence started getting people talking. Quote, it's like the Blackwater of finance, almost a shadow government. Blackwater as in the most infamous private military contractor during the War on Terror. Check out our mini documentary on them to learn more, link below. Now, on the surface, this may sound bad. This may sound pretty shady and corrupt. But if you think about it, if the government is going to step in, which they are, even though I don't completely agree with that, what else are they going to do? They're at least partially responsible for this mess for setting such low interest rates, so they're obviously already incompetent. They're not experts in things like mortgage-backed securities, so why wouldn't they go to the man that is an expert that helped pioneer these things in the first place? I'm not saying it isn't shady and corrupt. I'm just saying that giving these million-dollar contracts to a man like Larry Fink is understandable.
All right, watch this.
Because I think that's important too. You realize that these politicians they don't know anything about the markets. So who is giving them the information and telling them what to vote for, telling them what bills to pass, right? Because when you speak to the average politician, they don't know shit, right? So that's what you have to think. That's why like it's always a circle. They work at BlackRock, then they get, and then they work into the whatever politician office. They will work at the White House. They'll work at the Senate. Then they'll do that. Then they'll go back and work at BlackRock. Like so, that's they always going back and forth, and it's a big company.
And it didn't stop there. When the you-know-what hit the fan in March 2020 with COVID, BlackRock came to the rescue for both Wall Street and the government again. The Federal Reserve hired them to help bail out corporations with too much debt or that needed to borrow money to stay afloat, which again included corporations they have huge stakes in, which is again definitely not a conflict of interest. They also helped the Fed purchase more mortgage-backed securities on top of that. So where does BlackRock go moving forward? What does a man do when he already has everything? In 2019, people were petitioning against BlackRock for being among the top shareholders for oil and coal production. In fact, investing in heavy pollution industries has basically been the backbone of BlackRock's portfolio over the years. So according to Larry, they're making a push towards environmental, social, and sustainable investing. Whether or not they actually believe in this stuff is yet to be known. Nevertheless, it does appear they've made legit efforts to expand into this more eco-friendly market. With new environmentally focused products, they've partnered with activist investors, they backed a shareholder resolution basically forcing ExxonMobil to get serious about climate change. Larry even straight up wrote a letter telling companies that they need to, quote, contribute to society to receive his firm's support. This new push for sustainable investing, or ESG investing, is a big reason why you see so many corporations trying to appear woke these days.
If you want to invest in a company, they will, on their investor relations page, they'll show you their ESG score. ESG stands for environmental, social, corporate governance. And this is where the woke culture comes from. So they've created this kind of phony baloney rating system that says, well, if you, I'm exaggerating, but if you mention that you are, have a green agenda and you believe in carbon credits and you might trade some credits somewhere, then you get a higher score and therefore you're more investable. And it's very interesting to see how big investors like insurance company, institutional investors, they are steering away from anything that does not have the right ESG rating. And so in order to have investors continue to be interested in the stock, which is important for the company, for its perception, certainly for the officers of the company and the shareholders, you have to move this along continuously. And so it's very simple to see why doing a woke ad as Nike or as any other company, Pride Month is fantastic because Pride is easy. Throw up some flags, show the right people, trans, whatever. Right. And you got a high ESG score.
The main catalyst for Larry's success is the soul-crushing humiliation he experienced after losing $100 million. That's what really catapulted BlackRock into what it is today. He put his entire being into the company, and most people agree that he's still as driven as ever today. When asked on a personal level what's important, this is what he had to say. This may sound trite, but it's really important for me to be perceived as a good human being, a caring individual that always comes across as real and unpretentious. And one thing I tell everybody, you may not be able to print this, is that I'm the same turd I was 30 years ago, and I'm really proud of that. If there is indeed an American oligarchy today, Larry Fink would definitely be one of them. But is he a good oligarch or a bad one? Or are they just putting on a show to keep the public at bay? How influential is BlackRock really? How much control over the world do they really have? Let me know what you think in the comments below.
Yeah, so we watched another video, but like that's pretty much the summary of BlackRock. They just an institution that owns everything. Like they literally do own anything, and you could research it yourself. I think now, I know last year they bought the Panama Canal, right? Remember that China was trying to get it from them. No, the U.S. government, Trump, allowed BlackRock to own the Panama Canal, right? Because China was trying to take over. So now BlackRock is in control of that. And I think now what they're trying to invest in is it's certain infrastructures, like they're trying to own oil, like water companies and electricity. So I forgot what state it's in. I think it's like in Michigan somewhere or something like that. But there's a company that they're trying to own that it controls like over 150,000 people, where BlackRock is now in control of their energy and in control of their water. So BlackRock is moving towards that now. So that's going to be some new shit. And they're doing that this year. Like they're investing into that. So imagine they start becoming the top shareholders of water and energy companies, right? So everybody know about what's the it's not Warren Buffett. It's the guy that, man, the billionaire that owns all the farmland, Bill Gates, right? So everybody know more about Bill Gates and his situation, but not a lot of people is starting to understand about BlackRock's situation. So just think about it. Like if we get another recession or any problem that happens, the government uses BlackRock to distribute the money to companies and where it should go. And plus, it's obviously a cause of interest, right? Because they own majority of the shares of that company. So of course they don't want it to fail. So that's the reason of the bailouts, right? BlackRock is the one doing the bailout. It ain't Trump, and it's not the people at the White House and the politicians don't know what the hell is going on. They don't know anything about ETFs or mortgage-backed securities. They don't know any of that stuff. So they go to them and then and allow them to make the decisions. So that's the crazy shit. But let's do this. So we watch this video now next. I don't think it shouldn't be that long. I think it's like another 15 minutes.
Imagine being able to build any.
This video is on how hedge funds control America, so you could get like a good understanding with that as well.
Despite nearly all national polls showing him behind before the voting started, Donald Trump is now President-elect Trump.
The rise of Donald Trump came as a shock to everyone. Started as a publicity stunt, Trump's campaign became the ultimate black sheep. His victory left people baffled.
No one saw this coming, as you pointed out. Donald Trump was not only an underdog, he had his back against the wall.
How did he do it?
What Trump did very effectively is tap the angst and the anger and the hurt and the pain that millions of working class people are feeling.
And soon the big boss behind Donald Trump finally surfaced. It was the CEO of a $160 billion hedge fund, Robert Mercer.
Ladies and gentlemen, I am officially running for President of the United States, and we are going to make our country great again.
Can you guys hear it? Put a 1 if y'all can hear it.
When Trump announced his bid for the presidency, hardly anyone took him seriously. By the summer of 2016, Trump's campaign was losing steam. A victory seemed impossible. During his speeches, Trump wouldn't stay on message, and he couldn't handle the embarrassing leaks. Republican donors were skipping ships. It seems all but inevitable that Clinton would win. Then Trump's daughter, Ivanka, received a phone call from Rebecca Mercer, the daughter of a mysterious hedge fund billionaire. Robert Mercer. He's a renowned computer scientist who had a strong resentment towards Clinton, became Trump's biggest financial supporter. Mercer brought Steve Bannon and Kellyanne Conway from obscurity and inserted them into Trump's campaign, stabilizing it during a difficult period. As an artificial intelligence expert, Mercer knew that with advanced data science, voters' behavior can be understood and therefore influenced to Trump's advantage. His tech company, Cambridge Analytica, uses algorithms to help Trump craft every message and actions.
And we can match what you watch in a way that we can begin to select programs to advertise in that have the highest density of the target audience that we're trying to reach.
Growing up in New Mexico, the introverted Robert Mercer had
You know what's crazy? Because when you look at that, they could play scenarios, right? Because even BlackRock has that Aladdin, right? So what that means is like they could play out scenarios to see how we would react. Because remember, these institutions, they get all of our data and they get all of our information, right? So when you think about, that's how a place like Robinhood gets paid, because they send all of our execution to these companies, so they know how, as a society, we would react to certain things that play out. So that's why, like, you have to understand now in 2026, if something actually happens, it's because they have been running tests to see, okay, if we go this route, how would people react? If we go this route, how would people react? If we have them watch this, how would they react? If we have people listen to this, how would they react? So they have these scenarios played out because, like, us as humans is very predictable. So they have these algorithms that do all of that stuff. So just remember that, like, they get all of our information because of that. Like, every time you scroll on a phone, all of that stuff, right? The videos that people watch, like, they know how we are as society. So that's how they're able to use the algorithms to play out scenarios.
leading him to pursue a PhD in computer science. After working for a government-funded laboratory, Mercer was frustrated by the inefficiencies and the bureaucracies of the government. He took a job at IBM and went on to become a pioneer in computer linguistics. He was so talented that he caught the attention of Wall Street. He was recruited by Renaissance Technologies to develop computer models for trading stocks. He became the key figure that allowed Rentec to grow 10 times bigger in 10 years. And he also became a billionaire himself. With all that money, Robert Mercer wanted to change America by bringing back conservative politics. Since 2008, Robert Mercer had been making sizable political donations, all to conservative candidates. By 2014, Republicans won control of the Senate and the House.
This was a wave, a Republican wave that hit the Democrats and the president hard. And every race that was broke at the end broke in the Republicans' favor.
By 2016, with all that money and power, Robert Mercer, along with his daughter Rebecca Mercer, almost single-handedly put Donald Trump in office.
I bet nobody knew that.
Your next breakdown could cost thousands.
Unless you have endurance.
I will never pay for covered car repairs again.
Endurance covers your car's most expensive.
That is not the first time a hedge fund manager exerts such a powerful influence on American politics. On the other side of the political spectrum, George Soros has been advancing his leftist movement for decades. Wealthy people have been influencing American politics for centuries, but what makes hedge fund managers especially powerful is because their wealth is more liquid and less constrained. Many hedge funds trade rapidly, which means they can liquidate to cash much more quickly than, for example, tech billionaires like Elon Musk. And they don't have to report to the SEC when they do. As a result of freedom from regulations and a strong incentive to make profits, hedge funds' actions have been increasingly affecting American affairs than ever before. After years of reporting about wealthy people and companies, journalist Alfred Winslow Jones decided to start an investment company himself. But at that time, he doesn't want to sacrifice his freedom and privacy. He envisioned an investment fund that is free from government and market forces, and his performance will be solely based on how good his stock picking skill is. He came out with the idea of hedge fund. With every trade, he's insured by having a short position to cancel out the market impact. In the meantime, he kept the number of potential investors to be less than 100 to avoid registration with the SEC. And he only raised money from wealthy people. This was the first hedge fund in history. Little did Jones know, his simple yet brilliant idea will one day become a $4 trillion industry that affects almost every aspect of America. The birth of hedge funds created a new way for wealthy people to get wealthier. They're free to use any strategies to make money. Hedge funds use their investments for hostile takeovers, currency speculations, or to invest in exotic assets. By the 21st century, there were more hedge funds than a number of public companies. Hedge fund managers started showing up on the Forbes richest list. Banks, pension funds, and endowments all become investors of hedge funds.
Around 1990, nearly all the money in hedge funds was from rich individuals. By now, about 2/3 of the money in hedge funds comes from institutions. And that's a transformation. And so it means that university, college endowments have their money in hedge funds, retirement systems put their money in hedge funds, non-profits, like the one I work for, the Council on Foreign Relations, they invest the endowment that's funding the research in hedge funds.
In this documentary, I want to bring awareness about these.
So you see, like that's why like the hedge funds, everybody invest in it, so people's pensions, 401ks, colleges, nonprofits, they all invest in it.
The 33-year-old icon just bought enough shares to become a major shareholder for a public company. After an intense meeting with the board, when he presented his plan for the company that will maximize shareholders' value, Icahn is eagerly waiting to hear back from the company's management. By the age of 30, Carl Icahn had built a successful brokerage business, making him a millionaire, but Icahn wanted more. Recently, he has been testing his new theory that the management teams at American companies are a bunch of cowards. He can buy enough shares to become a major shareholder and use that power to change the company's management, and the company's share price shall rise. In other words, he's going to do hostile takeovers. After the board meeting, the management did not like his proposal, but Icahn decided that he will not go down without a fight. He told the management that he will go for a proxy battle in order to get his proposal approved by shareholders. A proxy battle is an effort by a shareholder of a corporation to convince other shareholders to cast their corporate votes. But instead, the management decided to pay him off by offering him $10 million just to walk away so that the management can keep their jobs. This is what's called a green mail. Carl Icahn had an epiphany. He has found a weakness in American capitalist system. To make money, all he has to do is to threaten to take over a company, and the management will pay him a green mail to walk away.
So that's how like BlackRock can control companies, right? So that's how like Bradshaw, like Warren Buffett's like that's how they able to control companies. So they buy majority of the shares, and then now they could be at the office table. Now they could make actual executive decisions by just owning shares of the company. So he would get paid just to not do it. So it's crazy.
If not, he can fire the management and hire new ones. Either way, the share price will rise. This realization will enable Carl Icahn to terrorize corporate America for the coming decades, amassing nation's greatest fortunes in the process.
It's my money. I worry about the bottom line because if I lose, I'm answerable to my bank account.
In the 80s, corporate rating became one of the most profitable businesses for hedge funds. Raters, as they were called back then, will accumulate controlling positions in a company, and they make profits by splitting the company up or selling some of the company's assets. While some of them did end up benefiting the shareholders, a lot of raters tend to be short-term driven, often making profits for themselves, while other long-term shareholders lose money. These hedge funds often have the money and the clout to take over a company and fundamentally change its directions. Even for a company like Disney was a target of a corporate rating. During the 80s and 90s, Disney had to pay hundreds of millions of dollars just to fend up corporate raiders who tried to liquidate Disney's assets for profits. What if Disney somehow was liquidated or sold for parts? What would the world be like today? Targeting a company is one thing, but some hedge funds have gathered enough money and resources to target an entire country.
I am addicted to this electrical engineering game.
Yeah, I pay for the YouTube after. But yeah, but that's the crazy part is that hedge funds they've been doing this shit for like decades.
Congress being suspended from the ERM.
The Bank of England just lost some tens of billions of pounds. Prior to that, the Bank of England was a target of attack by a group of currency speculators led by George Soros.
So George Soros was a currency trader. He's a forex trader. So he traded the pound currency.
When British government decided to raise interest rates in order to stop the pressure on sterling, I said to my partner, now this is the wrong policy for the British government in the long term. They cannot sustain this. Therefore, you can sell any amount of sterling because it cannot be maintained.
George Soros' Quantum Fund has become a force to be reckoned with. This hedge fund is unlike any other. George Soros' strategy focuses on timing and predicting various economic cycles and trends. He is what's called a macro trader. He trades market indices and currencies. But unlike other macro hedge funds, he doesn't really hedge. He has so much conviction in every bet that he will risk all of his portfolio with one bet. The strategy worked for him. By the 1990s, it made him billions. As the size of fund grew, Soros has become the catalyst, triggering economic crises and profiting from them. By early 1992, he saw a perfect opportunity like that in England. Soros sold short about $7 billion worth of sterling. Soros also bought $500 million worth of British stocks as a parallel play, because equities often rise after a currency devaluation. He didn't stop there. He also bought German and French bonds while shorting those countries' equities. Because of his strong credit, Soros only had to put down $1 billion in collateral to do all of this. He was leveraged 1 to 10, which was extremely risky. But
he was the godfather of over leveraging too, bro. Like it was it was all credit, bro. Like he betted it all, dude. Like that shit was crazy.
Soros had a strong conviction that he was right, and just as predicted, he made $1 billion from this series of trades. He was called the man who broke the Bank of England, making him one of the most notorious currency speculators in the world. Soros' quantum fund's performance has been so large and so consistent that even Warren Buffett's returns are pale in comparison. But Soros had a bigger ambition. Like many billionaires, he donated money to charities started by himself, which allowed him to influence geopolitics around.
But you see, like what he did, he paid attention to fundamentals. So like what he predicted was that while they was raising interest rates, right, it was going to cause pretty much a recession. So that's when he started betting that the recession was going to happen. Then he shorted the pound, but he also was buying the United Kingdom's stock markets as well. So that's how he made his big bets, by fundamentals, really knowing about central banks, like, and paying attention to interest rates.
In the world. For a long time, he has been the biggest benefactor for Clintons.
Yeah, like what that says, like it is true, because like when you're making that type of prediction, like people could follow you, you know what I'm saying? So like he could have been lying the whole time, but his influence and his massive positions, right, could have caused other people to just follow the herd. Like he probably artificial the recession, even if there wasn't one type of situation.
Politically, he's the opposite of Robert Mercer. The only thing they have in common is that they're both hedge fund managers with immense power. Now stands a reason to have money and power. All you got to do is start a hedge fund and make it a success. Not quite. You see, the success of Robert Mercer is a result of using advanced trading algorithms. Ironically, his success has made the market less accessible to the little guys. Over the years, with the advent of electronic trading and advances in science and technology, the market is getting increasingly complicated. The ways hedge funds make money are getting more sophisticated as well.
Sometimes you meet a person, a counterparty, and they'd have something you want. But to trade, you needed to have something they want, and it had to be the right quantity. The odds of that weren't high, and until you found a match, you'd either have to wait or sell at a price lower than you wanted. Now imagine there's a person standing at the center of this marketplace. He or she is willing to trade with everyone. If you want to buy something, they'll sell it. If you want to sell something, they'll buy it. This person is making a market.
Market making has become a profitable business for the hedge funds. To market makers, they care more about volumes than about asset prices. They want more people to gamble. By doing so, they practically become the casino, taking small profits from every bet that you make. There is nothing wrong with making money as an honest market maker. But in the end, you realize that the more you trade, the richer they become.
Robinhood turned the online brokerage industry on its head by offering free trading But if the trading is free, how does Robinhood actually make money?
Although Robinhood has free commissions, the buyers and sellers on Robinhood actually pay a fee in the end because their orders are being routed to market makers like Citadel. But when hedge funds want to trade, they don't use Robinhood or similar platforms. They trade in what is called a dark pool, where only sharks are allowed.
The fact that almost half of all trading is happening off exchange, and in some retail heavy names, you're seeing more than 70% of the volume executed in these internalizers or wholesaling systems. And that's damaging the markets, it's widening spreads, and it's a significant information advantage for those two firms, Citadel and Virtu, who operate a de facto duopoly in the internalization market.
Since the financial crisis of '08, the hedge fund industry has been declining.
Wait, you don't write anything down?
Hedge funds still control many major aspects of America.
The hedge fund industry has grown up. It now manages, by some estimates, $3 trillion globally. And the people running the most successful hedge funds are amassing unprecedented personal fortunes. I mean, really on a scale we haven't seen since the robber baron, Andrew Carnegie days. And they are doing this through financial speculation, moving money around, taking money, turning it into more money by kind of speculating in the market. They create relatively few jobs. Many of them in the US pay lower taxes than a salaried employee, a secretary, due to lobbying and various loopholes. And, they take a lot out of the system. So I just think it's important for people to pay attention to what they're doing. They're lightly regulated. They're constantly fighting against increased regulation and transparency.
From activist hedge funds trying to take on big corporations to market makers making profits on Robinhood, hedge funds are still making impacts that are felt everywhere. At the bottom of it all is about profit seeking without constraints. If hedge funds are solely made up by wealthy people's money, they can gamble a little. But nowadays, if a large hedge fund like Bridgewater fails, a lot of people's pension money, teachers' pension money, will be gone. At this point, it is unclear what will happen in the hedge fund industry in the future. But one thing is certain. As long as capitalism exists, there will always be someone with an immense amount of money that has the ability to influence the fate of an entire nation. All we can do is to shine enough exposure on them to limit their ability to do evil.
Yeah, so yeah, see, like when people is talking about recession or a market crash and all of that shit, right? It in reality, and they may not tell us this, but in reality, uh they would have to allow it to happen. You know what I'm saying? Like they're gonna have to allow it to happen in order for that type of situation to occur, right? Because it makes you question also the financial crisis of 2008, right? Because like they literally made a movie on that shit. So it's like, what if they did it on purpose because they knew that there was going to be a reset and they knew what the government was going to do before the crash, right? Because it makes you question everything. You know what I mean? Because these people ain't stupid. They're greedy, but they ain't stupid, So, like, if there's ever a war in the United States of America, like, that the whole world tumbles, right? Because it's like everybody's pensions for like people's retirement accounts is being invested in the US markets. You know what I mean? So that's another like weapon that we use, and it's not just in America, Europe, United Kingdom, all these countries and like BlackRock in these top countries. I mean, these top corporations, like they own not just all the stocks in America, but they own all the stocks in the whole world. Like in Europe, London, they own it all over there too. You know what I'm saying? So it makes you question everything. It's like is like when 2008 happened, 2020, right? It makes you think like shit, like when you really think about what happened in 2008 and 2020, when you don't think about the housing crash, don't think about COVID, when you look at what they did to save the economy, they did the same shit, right? There was bailouts, there was stimulus, there was they started flooding the markets with the economy with more money, with more dollars, right? Why in both times corporations was making more money when people wasn't working, right? So people's getting laid off and their stock prices are still going up. It doesn't make sense. So it makes you question, like shit, like was 2008 like did they make allow that to happen? You know what I mean? Just so that they could, because in order for stimulus, in order for massive rate cuts to 0%, the only way they could do that is if there's a problem. They can't do that when the economy is doing well. They only do that when there's a crisis. So the crisis is artificial. They do it purposely. But yeah, guys, you guys could leave. I end it here. This is like an hour. I know you guys ain't gonna watch it. So I'll watch a little of it, and I'll probably watch a little on my own time. But if you guys want to chill, but this is about BlackRock. It's more like way more information on BlackRock. It's good to know, because again, like it's not, when you think about it, it's not these politicians, they all work together, right? They all go to Yale, Harvard, they all start working at the same banks. They go to the BlackRock, Vanguard, State Street, then they go work for the politicians in the White House. And they also do that shit in Europe. Like they work for these hedge funds and these institutions, and then they work for the actual politicians, right? They work for the government. Then they end up working at the Treasury of the state. Like they end up having a position at the Federal Reserve. Like it's just always a circle. You know what I'm saying? It's not going to be somebody that one of your cousins, ends up working at BlackRock. It ain't going to be like that. You know what I mean? So it is interesting to know this type of shit. But yeah, guys. Yeah, I'll give it. Let's see how this goes.
This is not another mainstream video about BlackRock. By now, people know the public narrative.
BlackRock is an extremely dangerous company. They have that much control to get everybody to do what they want them to do. Larry Fink, the guy running BlackRock, is really the president of the United States. If we look at the kind of influence he's got in every industry, Joe.
But Larry Fink isn't content with owning companies anymore. Slowly but surely, he is taking control of the very bloodlines of the global system. Larry Fink has started executing his $68 trillion game plan, and no one is going to stop him.
Whoa. What's that? I just built a budgeting app in Base 44. Guys, Nina just built a...
The fact that BlackRock has extraordinary influence behind the scenes that's unprecedented is not good for the public interest.
This is Tarek Fancy, an ex-BlackRock executive turned whistleblower. We've sat down with him to bring you some exclusive insights into the secretive world of BlackRock.
I was formerly BlackRock's first chief investment officer for sustainable investing.
And to uncover BlackRock's new game plan, we've interviewed Dr. Thomas Meroy, an expert in public banking and infrastructure finance.
The United States, think of this, spent more money than ever spent on a project before and lost 38,000 lives in the building of the Panama Canal. My administration will be reclaiming the Panama Canal, and we've already started doing it.
BlackRock strikes deal to bring ports on both sides of Panama Canal under American control.
Trump wants to reclaim the Panama Canal. And while the world is focused on the headlines, most people have no idea what's really going on behind the curtain. This isn't just about Trump's America First playbook or about BlackRock securing the most important trade route in the Western Hemisphere. The Panama Canal is only a tiny piece in a far bigger board game.
The one international airport at your major city in or region. You buy that and you have control of it. It's a monopoly.
This is about a global game of airports, pipelines, power grids, and data routes. And right now, Larry Fink is quietly buying up the whole board. We'll get to all of that. But to understand why Larry Fink is reshaping the world, we have to start at the moment he realized he wanted to control it. It's the late 1960s. The average Californian teenager dreams about changing the world, or at least escaping it for a little while. But Larry Fink isn't your average teenager. While others chase enlightenment, Larry doesn't concern himself with such trivial matters. He's consumed by a far more important question. How can he become one of the most powerful men in the world? How can he, a shoemaker's son from nowhere, be spoken of in the same breath as presidents, CEOs, and kings?
This is a guy who always wanted more than he had. You could sense his ambition.
Politics seems like the obvious path. So naturally, once Larry hits 17, he enrolls at UCLA as a political science major. But then, something seemingly insignificant changes everything. On impulse, he enrolls in a few extra classes in real estate. Suddenly, he's not dreaming of the White House anymore, but about skyscrapers and fortunes. After 2 more years and armed with...
So that means he was trying to be a politician. That's the crazy part.
With a real estate MBA, Larry Fink is still unsure on how exactly to turn his dreams into a reality. But his goal still remains the same: power and riches. So like most power-hungry finance graduates, he heads to the place where megalomania naturally takes you to the top: Wall Street. Little does he know the trauma wait.
Yeah, and I just want to talk about this part because most people think that the politicians is the ones that's running everything. Like, think about it. Where is their money? Right? So it makes it obvious like who is making making these decisions more broadly, right? Because who is paying them? Who's paying for them to get voted in? Who, like, just like when we last listened to the last video about Trump, the billionaire hedge fund is funding his campaigns. Like, who is funding the campaigns? So this shows like who are they actually listening to, because these politicians don't know anything about how the economy, how the markets like is impacting the economy. They don't know. You know what I'm saying? Like, just think about it, right? So when you understand like, oh shit, maybe damn, these BlackRock people, these institutions, they're the ones that's actually running things. They're the ones paying for the lobbyists. They're the ones getting these type of laws being passed, right? A lot of shit that's helping benefit them, obviously, but it's a reason why these institutions never fail, right? So it's just interesting where every single job in America, if you have a 401k, right, where it's going to Fidelity, right? You're either using Fidelity, State Street, or probably BlackRock, right? But most of the like the companies like Starbucks or probably McDonald's, when you have a 401k, that money that's coming out of your paycheck is going to one of these companies, right? It's no random shit. You don't even pick it. That's the crazy part. You don't pick it. You know what I mean? So they're like, they just take your money out every week and invest it into their company, and you don't even pick it. So yeah, I mean, I trust 401ks. I do. Because if the 401ks fail, then the banks fail, right? So that they don't get their money. So they have to keep it afloat. But it fluctuates like the markets. The 401k, you just pick what investments that you want to use, but typically it's just following the S&P 500. but you get to pick like bonds or stocks, ETFs. You get to pick what you want. But if they invest it for you, like they have to do well because they also make a profit too. So it's a win-win. Like they put themselves in a situation where if they fail, we fail. But if we fail, they also fail too. So the only difference is that if you make 1 million, they're making 100 million from your million. You know what I mean? So that's how they benefit. You make 50 grand, they're making 500,000. So that's the problem.
For him when he gets there. Now, 34 years old, Larry is at a crossroads. He spent almost a decade climbing the ranks at First Boston, one of New York's most prestigious investment banks. But he's just made a huge mistake, one that'll do more than just tarnish his tidy plan for world domination. Let's rewind a little bit. It's 1976, and Larry Fink steps onto Wall Street for the very first time, joining the bond trading department at First Boston. As a young Jewish trader, he encounters the prejudices typical of that era. But Wall Street, for all its sins, has one sacred truth. It worships only money. Make money, and suddenly nothing else matters. And Larry has found his calling. He starts printing money by the millions. How?
At First Boston, he was a pioneer in developing an obscure financial product that was pretty much under the public radar.
3 words: mortgage-backed securities. Words that still send shivers down the back of Wall Street today. But what even are mortgage-backed securities? Think of mortgage-backed securities like a financial casserole. Mix a hunch of home loans, bake them into one product, then slice it up to sell to investors. The idea? Diversification. The danger? Too many bad ingredients ruin the dish. Homeowners pay their mortgages and investors collect steady profits. A beautiful arrangement if you're on the right side. In other words, it's the perfect fixed income instrument to monetize the American dream itself. Along with mullets and shoulder pads, mortgage-backed securities are all the rage in the 1980s. And Larry didn't just ride this wave, he practically created it. He helped invent, popularize, and of course, profit handsomely from these complex financial instruments. But more interestingly, he will profit even more from the collapse of his creation later. For now, though, he rises faster than anyone before him at First Boston, and within 2 years he becomes managing director, the youngest ever in the firm's history. Larry even overheard whispers around the office. The higher-ups were considering him for CEO. But with such extraordinary success comes extraordinary ego. He starts rubbing people the wrong way. At his worst moments, he's remembered as a big swinging dick.
Why are you still using bots for your meetings? How else am I going to remember what happened? Just use granola. Okay.
Wall Street loves putting ballooning egos on pedestals, but it loves tearing them down even more. One misstep is all it takes. Determined to cement his path to CEO, Larry takes a huge gamble. The Federal Reserve is about to make a decision on interest rates soon, and Larry goes all in, certain that interest rates will rise. He positions the firm to profit accordingly, and just in case he's wrong, he buys financial insurance, a hedge to protect the downside. Then disaster strikes. Interest rates don't rise, they plunge. Larry shrugs. He'd anticipated this possibility after all. His carefully placed insurance would cover the losses, or at least he believes it would. Except there was a problem, a single devastating numerical mistake. Larry had miscalculated his hedge using incorrect numbers.
I was so angry at myself. I was just mortified at myself.
A small error on paper, but in reality, it cost the firm $100 million, gone in an instant.
But you see, like what we was talking about earlier, that hedge funds plan like 6 months ahead, like months ahead in their positions. So he was like predicting that they was gonna hike interest rates. It wasn't like that day, like he just went 100 million deep. Like he was planning that they was gonna do that months ahead. You know what I'm saying? And that's when he ended up being wrong, but that he thought he was gonna protect his loss by hedging, mortgages. So
$100 million mistake, enough to destroy anyone's career overnight, no matter how brilliant. Despite generating at least $1 billion for the firm during his tenure, Larry quickly becomes an outcast at First Boston, one that people won't talk to in the hallways, and not long after, he's jobless. Taking on too much risk in the markets can completely screw you, but you don't have to make the same mistakes as Larry Fink here. If you've thought about investing and trading on the capital markets but are too scared of the risk, our free community group is the place to learn and take that first step. We have started a free group where we're working with an ex-Wall Street trader whom I know personally. So if you're ready to stop following the crowd, and especially in these,
we should have been fired a year ago and a quarter ago before the loss. We were making so much money and we had no idea why we were making so much money. We had just extraordinary risk.
Larry had always gotten ahead by taking more risk than others, but ultimately that's exactly what led to his downfall. For the first time, Larry carefully considers risk. Risk, he realizes, is a powerful drug, seductive, but dangerous. He had learned this lesson the hard way. From now, he vows to become the master of managing risk. What seems like a conservative approach would soon become Larry's golden ticket to world domination. But first, Larry has another hurdle to overcome. To rebuild, he needs an elite team of traders. A tough task when you're the castaway of Wall Street after losing $100 million. Yet, somehow, he pulls it off anyway. A powerhouse team of 8 all-stars. Now all he needs is financial backing. That's when Larry crosses paths with legendary financier Steven Schwartzman, co-founder of the private equity titan Blackstone. Schwartzman always.
So that's what I'll tell you guys. Like he over leveraged like massively and betted big and messed up. But when you look at what the other guy did from was it George Soros, he invested big but made it big. So but you can see like Larry Fink, he focuses more on risk management now.
Looking for his next big play, agrees to bankroll Fink's fledgling operation with $5 million for a 50% stake. And just like that, in 1988, BlackRock is born. Right from the start, BlackRock flips the script on Wall Street by putting risk management front and center.
The investors had no idea the risk they were taking. And there was a great need for a company that starts off with a high concentration in risk analytics.
BlackRock's sales pitch: manage fixed income assets like bonds for clients while offering state-of-the-art risk analysis as part of the deal, and in return they charge a percentage fee based on the assets under management. Unlike traditional firms, which separated risk oversight from their day-to-day investing, BlackRock's innovation is to embed rigorous risk modeling directly into every investment decision from day one. Larry's idea of managing risk catches on fast, despite the high-stress nature of the job. Within months, the company turns huge profits, and within a year, they were managing nearly $3 billion, unheard of for a firm that young. But behind the rapid rise was something even more extraordinary, a secret weapon that would secure BlackRock's reign for decades.
His open secret to success is a massive computerized system called Aladdin.
Short for Asset, Liability, Debt, and Derivative Investment Network. Aladdin was more than a computerized system. It becomes the brain and beating heart of Larry's new empire. It allows Larry's team to instantly simulate endless what-if scenarios. What if interest rates rise by 1%? How would that impact a $10 billion bond portfolio? What happens if mortgages in California start defaulting en masse? Aladdin delivers answers in a blink. For any large institution trying to navigate volatile markets, Aladdin becomes priceless.
Here are 65 AI tools you have.
But you see what I'm saying? Like and then all the institutions, they could pay for Aladdin and they're using that technology. So when you had like so that means the whole AI system has to be completely fucking wrong in order for hedge funds and institutions to mess up. So you can see, like, that's what I'm saying. It's like they could know exactly like what happens if they pause interest rates from now till next year, what's going to happen with the markets, right? So they could already play out and map out scenarios for when the recession is likely to come. So this is how they pre-position themselves months in advance. You see what I'm saying? So none of this shit is like random. You know, and they all have this technology, right? They use that, and I'm pretty sure like they probably found other ways to make similar technologies, but that's what it shows, right? They're they pre-predict every scenario, you know. So it's crazy to think about, but this is the stuff that they're using. So that's how I said, like, when we deal with problems, and especially in the US, it's like, are they doing this on purpose? Because it's like they know what to do to get out of it, and to not allow it to happen. Like, we shouldn't have another 2008. So if we do have like another crisis or whatever is the next one that we get, guarantee they're already positioned themselves for it. You know, they already know when it's going to happen and know how to get out of it ahead of time. Yeah, exactly.
Its moment of truth comes in 1994 during the infamous Great Bond Market Massacre. As bond prices plummet across Wall Street, most investors suffer brutal losses. But BlackRock, having spent 5 years fine-tuning its risk models, weathers the storm with minimal damage. Clients quickly realized it wasn't luck, it was Aladdin. The software flags critical risks early, allowing BlackRock to sidestep the worst of the carnage. In fact, this episode reveals an early pattern and sends a clear message. When things get messy, when risk gets complicated, you better call BlackRock. And as you'll see later, that message still holds true today. However, BlackRock's unbothered rise was short-lived as Fink and Schwartzman soon begin to butt heads. Larry wants to attract the best talent by offering ownership in BlackRock, but he insists this comes entirely from Schwartzman's share. After all, he and his team are doing all the heavy lifting. Schwartzman, not one to be pushed around, refuses.
We set up an economic arrangement which ended up being inappropriate for a business that was growing as rapidly, needed to add as many people. And I made a mistake. You know, I took the original agreement. I didn't want to change it, which was advantageous, you know, for my side.
He clings to the contract, but called his decision a heroic mistake years later. By 1994, BlackRock manages over $50 billion. But the power struggle between Larry and Steven reaches its inevitable conclusion, a split. Schwartzman stays with Blackstone. Larry takes full control of BlackRock. But what happens next is what truly sets BlackRock apart, transforming it into something far more powerful and potentially dangerous than just any other financial giant, something beyond even Larry Fink's wildest imagination. After BlackRock goes public in 1999, it enters an era of rapid growth and expansion. The secret weapon behind its explosive growth? Aladdin. What began as BlackRock's internal risk management software soon becomes the gold standard for portfolio management on Wall Street. Sold to rival firms and clients eager to understand complex financial risks, Aladdin quickly becomes a virtual money printing machine, charging juicy fees for a software that the entire financial industry desperately needs, and not only them. BlackRock is no longer just an asset manager. Larry Fink is building a sprawling empire. But to realize his grand vision, Larry goes on a shopping spree in the early 2000s. With every deal, BlackRock expands beyond its roots in fixed income securities. Now it's equities, hedge funds, or global fund platforms. BlackRock becomes a one-stop shop for institutional investors, trusted to manage everything, everywhere. With each company they absorb, BlackRock grows tremendously, with their assets under management rising dramatically each passing year. But it's a time of complete market mayhem that provides Larry with his biggest prize yet and finally makes BlackRock a world power. Mortgage-backed securities. Remember those? Larry, the kingpin of these kinds of securities in the 80s, had since learned his lesson. For the last 20 years, he'd been busy nurturing his risk management empire, extending its reach, bolstering its influence. But MBSs hadn't conveniently disappeared. In fact, they'd cast a spell over American finance and promptly corrupted it.
There are fears the sell-off will continue on Wall Street. It is definitely a very, very difficult time, and it's not going to get better quickly.
We are watching this market deteriorate. The stock market is now down 21%.
Pearsall is basically like the sad older cousin of the Eagleford. It's even nicknamed sometimes the Heartbreak Shale. 05, 08, there was a company called...
Larry, familiar with the sting of MBSs, had limited BlackRock's exposure to these volatile securities. Major banks feasted greedily on them without truly understanding the risks. Huge financial giants woke up to the realization that the billions they had invested in these assets were evaporating before their eyes. As they watched Bear Stearns lose 90% of its value and the Titan Lehman Brothers become the Titanic, everyone began to panic. This spelled disaster to many, but opportunity to a few. Companies run conservatively, like JP Morgan by Jamie Dimon, managed to scoop up sickly competitors at a bargain and becoming the world's most powerful bank. Larry didn't intend to miss the party. Barclays Bank bought part of the collapsed Lehman, thinking they were getting a steal, until they ran the numbers and figured out that they bought the financial equivalent of nuclear waste. Desperate for cash, Barclays was forced to sell its crown jewel, Barclays Global Investors, home to iShares, the world's leading provider of passive ETFs. Larry refuses to let the opportunity pass. Flush with cash and ambition, he seizes the moment and strikes a deal to buy the crown jewel out for $13.5 billion. While few talk about it, that single deal transformed them into the world's largest asset manager. ETFs are exchange-traded funds and let investors spread their money across countless companies and reduce risk. And now the biggest are all owned by BlackRock. They buy the individual stocks on behalf of their clients.
I wonder if that's a part of Warren Buffett's investment firm's plan, because all their money is in cash, right? So I wonder, because like that was the whole like that's what happened with BlackRock and these other companies. They're able to buy them out because majority of them their capital was liquid. So I wonder if that's like Brickshaw's plan too. Like if something goes bad, now they could start owning certain companies too.
And wind up owning chunks of about any big company you can imagine.
Or she took a loan out on it.
Or
She's repaying it.
UPS sounds more harmless than it actually is. But it means that BlackRock isn't just a player anymore. They have become a kingmaker, holding major voting power over corporate decisions, from executive pay to diversity initiatives or mass layoffs. Yet crucially, BlackRock is still technically classified as a passive investor, just managing other people's money, not its own. It's a seemingly small technicality, but one that would soon give them unprecedented protection. More on that later. For now, Larry Fink had done it again. He capitalized brilliantly on the crisis. After the acquisition of BGI, passive ETFs like iShares would grow phenomenally popular over the following years. Looking back, BlackRock executives must have been feeling pretty pleased with themselves. With a stranglehold over passive ETFs, right before their boom as an investing vehicle. But if all that isn't enough, these mortgage-backed securities, the ones wreaking havoc on firms across the world, they are so mind-bendingly complex. Companies stuck with these investments struggle to make sense of them. Larry, one of the original architects, suddenly becomes a very popular man. Already a leader in risk management, everyone wants Larry's team to take a look at their investment portfolios and lend their wisdom, for a price, of course. And then the mighty architects of money, the bank of all banks, come calling.
BlackRock's relationship with the Fed is a really useful thing for the public to know about. The central bank can do things to make our lives better, and it can do stuff to make some people really rich.
None other than the Federal Reserve itself, trying to patch the pieces of a crumbling economy and stop the bleeding, is desperate for help.
As an expert on mortgage-backed securities, he was called in to help and to clean up.
US central bankers like Timothy Geithner tap BlackRock to write the playbook for how to rescue a financial system on the brink. This is no overstatement.
There was a day in which Geithner called him 21 times in a day.
Larry's team drafts the game plan for restructuring portfolios, valuing toxic assets, and bailing out collapsing banks. Larry Fink had turned the greatest financial disaster of a generation into his greatest triumph. While American finance takes years to rebound, he emerges with friends in high places, more money than ever, and what he's always wanted: the influence of a president, a company like a world power, without a single campaign nor a single vote. True power. And while no one was taking notice, he has created a playing field where, no matter what, BlackRock always wins.
This is the AC device my team spent.
Yeah, I think that's crazy, man, because the Federal Reserve went straight to BlackRock to help them through the crisis. Crazy.
He had no regulation, no federal or state public official had any idea what was going on in those markets.
I was really upset about what went on Wall Street that brought about the financial crisis. Not only almost destroyed the financial system of the United States, almost destroyed the financial system of the world.
After the financial crisis, the US government is forced to act. Wall Street's biggest players had done too much damage to everyday Americans. It was time to clamp down on them. Time to send shivers down the back of powerful Wall Street executives. Rules were passed and regulations tightened, at least for some.
And I think fundamentally the question is, do we feel like the regulators have the ability to protect the public?
The Dodd-Frank Wall Street reform was at the center of it all. The cornerstone of financial regulation. It creates a label, too big to fail. This designation targets SIFIs, whose collapse could bring the whole economy crashing down. Immediately, the biggest banks feel the heat. Dozens are swiftly branded as systemically important, triggering stricter oversight, expensive capital reserves, and burdensome regulatory compliance. Everything profit-seeking shareholders hate to hear. But what about BlackRock? Surely the world's largest asset manager fits this description. Not quite. Here's the little talked about part.
To quote Bernie Sanders, he says that it's not that Congress regulates Wall Street, it's Wall Street regulates Congress.
While the rules got stricter for everyone else, BlackRock executives were busy working their ways into the back rooms of Washington. By the time regulators finally turned their attention toward asset managers, it set off alarm bells at 50 Hudson Yards, BlackRock Global Headquarters. The regulation has to be stopped, no matter what. But Larry Fink and his team are ready. They have already carefully prepared a game plan to carve out a loophole for BlackRock to slip right through the new rules. BlackRock launches an unprecedented lobbying blitz combined with a strategic PR campaign aimed at convincing the public and regulators that a BlackRock collapse would pose no systemic risk. Larry Fink personally meets President Obama, ensuring his message is heard at the highest possible level. His efforts pay off big time. To this day, BlackRock has avoided the too big to fail label.
There needs to be greater scrutiny on the size and influence of large institutions if, number one, they can influence public policy and politics in ways that don't align with the public interest, right? And I think a lot of people on Wall Street will just brush that off and say, oh, that doesn't matter. And I would say they're dead wrong on that because the majority of the US population has now believed for decades that the system is rigged.
However, there's an even more striking case of BlackRock's power in Washington, the passive investor status. If you are labeled a passive investor, you're off the hook from the rules everyone else has to follow. Now guess who decides if BlackRock is a passive investor or not? BlackRock itself. And it's this passive status that allows it to control substantial shares of companies across almost every industry without breaking a sweat.
The fact that BlackRock has extraordinary influence behind the scenes, it's unprecedented, and is able to use political spending and other influence tools to, be able to solidify that influence is not good for the public interest.
But BlackRock's power isn't just about dodging regulation. It's about writing the rules of the game.
So we have a relatively new infrastructure bank here, public infrastructure bank, called the Canada Infrastructure Bank, the CIB. The construction of that institution was both advised by these large private sector consultancy firms like McKinsey, but also importantly by BlackRock. And the result is that the law, the public law governing the Canada Infrastructure Bank, called the Canada Infrastructure Bank Act, has as its mandate to use public money to generate private investment in ways that generate a return.
In other words, BlackRock doesn't just navigate systems, it shapes them from the ground up in ways that favor its mission. Critics see in Larry Fink and BlackRock the poster child for what's broken in the system. And you might wonder, how is this even possible? The answer is a playbook used by the corporate elites for centuries. They call it the revolving door between corporate America and the government.
Well, this is what I was telling you about.
In recent years, this revolving door going back and forth, where, and it's happened at all the firms that I've seen, where people go in and out of government.
It's a common thing that banks, investment firms, and corporations hire government officials and governments hire corporate America's top executives, each borrowing influence from the other.
One of the problems you have is that some of the smartest people will go into politics and they don't get paid a lot of money because it's not Singapore where the government officials get paid, somewhat competitive with the private sector. It's the US. And so when they leave office, they're going to want to go and get a job that is, that pays well, right? Because all of their friends that they went to business school or law school or undergrad with are getting paid a lot of money in sectors that have no value for society. Some of them, explicitly allowing money laundering or whatever. So they sort of want to get paid well.
But BlackRock turns this revolving door into an art form. By 2020, according to members of Congress, more than 100 individuals have moved back and forth between BlackRock and top US government institutions, the Treasury, the Federal Reserve, the SEC, and more. But it goes much further than that.
There is the potential for abuse too. People with experience could conceivably move into government, create regulations or create precedents that would favor their prior employers, and then turn around and go back to their prior employers. That's possible.
Many point to the fact that having BlackRock alumni in key regulatory positions makes it far less likely that the firm will face serious oversight.
I think we've just come to a place where, there's a revolving door, there's significant skewed incentives, and this seized both U.S. parties. And I think the unfortunate reality is that it's very hard to see a way out and some way to restore the trust of the American people whose side I would take in this against their political system and two parties that seem to clearly not work for them.
And it's not just in the United States. BlackRock's political influence is global. Since 2004, the firm has hired at least 84 former government officials, regulators, and central bankers from around the world. At the same time, ex-BlackRock executives are placed into public office, quietly shaping policy from both sides of the fence. The most striking example, former BlackRock executive Friedrich Merz is now Chancellor of Germany, Europe's largest economy. But BlackRock isn't just influencing.
See, that's fucking crazy. And it's not just BlackRock that's doing that. All institutions are probably doing the same, playing the same playbook. But you see, like, people think it's just the president that's making the decisions. So I hope that this actually opens you guys' eyes, because majority of people don't know this or even care to know it. You know what I'm saying? Most people don't even know what BlackRock is.
Governments or global institutions, it's dictating terms.
And I've been in rooms with the World Bank and with multi-billion, trillion-dollar institutional investors where they've said to senior World Bank officials that what we want you, the World Bank, to do and other public banks to do is to wrap our investments in guarantees. We want you to guarantee both our capital and our returns.
BlackRock takes the profits and the public, the taxpayer, takes the risk. And they have the political muscle to get what they want. But if you think their power only comes with cozy government ties, you're missing the bigger picture. Because BlackRock's true power isn't who they know. The true reason why BlackRock is so scarily powerful is something else entirely.
You, just you, building your app on base 44.
They say the world of finance runs on Excel, but these days it actually runs on Aladdin, the software platform designed by BlackRock. What Windows is to personal computing, Aladdin is to global finance. Only, unlike Windows, Aladdin has no serious competitor. Even BlackRock's fiercest rivals, Vanguard and State Street, rely on Aladdin as their go-to system to manage risk. In fact, it's the operating system of global finance. By 2020, Aladdin tracks an astounding 21 trillion for roughly 240 clients, about 10% of all global financial assets. Yet the real power of Aladdin lies not just with private finance, but with public institutions themselves. When crisis strikes, whether it's the US Federal Reserve, the European Central Bank, or Japan's trillion-dollar pension funds, they all turn to a single company for help: BlackRock. During the COVID-19 market turmoil in 2020, the Federal Reserve urgently hires BlackRock to manage its massive bond buying programs designed to stabilize the economy.
BlackRock's relationship with the Fed is a really useful thing for the public to know about. The central bank can do things to make our lives better, and it can do stuff to make some people really rich. The Federal Reserve has gone to BlackRock for particular services that BlackRock is good at. Now, those programs were unprecedented and unusual.
In other words, central banks and governments across the globe have effectively outsourced their crisis response mechanisms directly to BlackRock's Aladdin.
What's unusual here is that the topmost people at the Federal Reserve are talking with the leader of the biggest asset management firm, and that in these moments of crisis, we're just going to this firm, not necessarily all other firms.
This dependency raises deeply uncomfortable questions. If every major financial institution depends on Aladdin, who steps in if Aladdin fails? And who ensures BlackRock doesn't exploit Aladdin's insights for its own gain? The simple answer: no one really. Aladdin itself isn't regulated. It's just a software tool owned by BlackRock. And remember, as an asset manager, BlackRock officially isn't considered systemically important. For now, BlackRock's Aladdin remains virtually unchecked, a single black box powering the operating system of global finance. And at the top of this mountain of money and influence stands one man, Larry Fink.
You have to force behaviors, and at BlackRock, we are forcing behaviors.
Yeah, exactly. It's like their own chat GDT for trading. And it's more crazier because it's like they're managing their risk,
appear in Larry
like their risk
footprints
portfolios
because
with
as
it.
powerful
So
as he is,
imagine
Larry
if
Fink doesn't
something goes
always
wrong,
get what he wants.
it's all they all will collapse at the same time, you know? So it's kind of scary.
Larry Fink is under fire. For years, BlackRock flew under the radar. In fact, outside of high finance, only few people knew about BlackRock. But that changed in the late 2010s. For the first time, the world pushes back. The allegation? BlackRock is destroying the planet, pumping billions into oil giants, leading to the demise of Amazon forest. Protesters repeatedly swarm BlackRock offices, even show up at Fink's own doorstep. The Guardian names Fink one of the top climate villains for this very reason. But Fink had seen this coming, and he came prepared. He didn't want to play the villain for long. Instead, he becomes the self-elected conscience of Wall Street. He rebrands BlackRock as a champion of ESG.
So it stands for environmental, social, and governance. And the idea is that there are specific issues, whether it has to do with climate change or whether it has to do with boardroom diversity, that are important issues for investors.
Larry Fink declares sustainability, diversity, and climate action as BlackRock's core investing principles.
This is a bunch of American Wall Street bullshit.
But at first, it works. Finally, a Wall Street titan that cares about people and the planet.
CEO Larry Fink made a lot of noise around it. The whole space had grown sort of in the last century, and the idea was that you invest in a portfolio, but you don't partake in the ones that you think are not ethically correct, because you know you don't want to make money off it effectively.
BlackRock is briefly celebrated as a trailblazer and hailed as a model for moral capitalism. But with its repositioning comes his boldest move yet. A direct threat to America's CEOs. Companies must go green or risk losing BlackRock's backing altogether.
You have to force behaviors, and at BlackRock, we are forcing behaviors.
Suddenly, BlackRock is no longer just managing portfolios. They are shaping the moral compass of corporate America itself. But not everyone buys into it. Environmental groups point to the hypocrisy. BlackRock still had massive fossil fuel assets. On the other hand, Larry Fink's rebranding comes under huge scrutiny from powerful figures on Wall Street and in conservative circles.
And so what happened was they were saying ESG is good for profits, which is the sports equivalent of saying if I play really clean and I'm sportsmanlike, I'm going to win more games and score more goals. That was not true, as I saw from the inside.
Legendary investor Sam Zell mocks Larry Fink openly as extraordinarily hypocritical. You might already know the real estate tycoon from our previous documentary about him. Zell sarcastically remarks, "I didn't know Larry Fink had been made God." Venture capitalist Chamath Palihapitiya goes even further and labels ESG investing a complete fraud. For him, the politically correct rhetoric is only a way to mask poor financial returns. And even our interview guest publicly denounced BlackRock's ESG agenda as a mere marketing spin.
It was just a way to exploit people who care about it and waste time.
Here's how he breaks down how it worked from the inside.
You suddenly say, hey, I have this product, and it's an ETF or it's some sort of passive market product that's just effectively a basket of shares that tracks this index.
But remember, BlackRock's profits don't come from market performance. They come from the quiet fee they charge on your money, management fees on the trillions sitting in ETFs, typically just 0.5%. But across the industry, there's a constant hunt for reasons to raise those fees and extract more from the system, bit by bit.
And there's a lot of fee pressure, and I need to differentiate it so I can get premium pricing. And then you realize that, wait a second, if I take this ETF and make it an ESG ETF or green ETF, which is, I would say, if I'd simplify it, it's the product equivalent of taking the thing you had, painting it green, and then putting it out there and putting a higher price tag. is that something we can get away with? The market was doing this because there was an opportunity to go in and paint your thing green and get more fees, and no one is actually policing what it is to be green.
By 2022, the backlash had gone nuclear. Republicans painted BlackRock as the face of woke capitalism, accusing Fink of pushing ideology over investor interests. Florida pulled $2 billion from BlackRock funds in protest, the largest anti-ESG divestment in history. Texas launched investigations into whether BlackRock's politics were hurting retirees. By now, the writing was on the wall. Faced with mounting pressure from both sides of the fence, Larry Fink executes a quiet but profound retreat. BlackRock began rolling back its boldest ESG initiatives with minimal publicity. In late 2023, BlackRock quietly exited the Net Zero Asset Managers initiative. Internally, the firm is slowly shifting its language. In BlackRock's public documents, explicit references to ESG and diversity initiatives are removed. The firm is quietly stepping back from the controversy without drawing attention.
Larry Fink doesn't even say ESG anymore, right? I mean, that tells you that, that's not even me saying I told you so. It's really just saying, look, you could see what it's all about. It's PR.
But their actions speak even louder than words. In 2020, BlackRock supported almost half of ESG shareholder proposals. By 2024, its support had plunged to a mere 4%. Many critical climate proposals failed to pass due to BlackRock's withdrawn support. Larry Fink himself admitted publicly that he's ashamed of being part of the ESG conversation. He attempts to distance himself from a movement that has become too politically charged.
I think it's terribly dangerous when you have business leaders go up and they claim that they have values and that they care about things and they want to do the right thing. If they're found out later to be full of hot air, we're not just going to waste time. It's even worse. They're gonna destroy the public's faith in business.
However, Larry Fink is always looking ahead. The tide has shifted. The ESG hype train was over, and the profit potential has clearly waned. But when profits dry up, BlackRock doesn't stand around and wait. Quietly but decisively, they've moved on. ESG has become a distraction, and with passive ETFs reaching a saturation point, Larry Fink knew it was time for BlackRock's next strategic move. Something tangible, essential, and far more profitable than moral branding or abstract indexes. Something that affects every part of modern civilization, everywhere on the planet.
And what's crazy is that they're pretty much doing it anyway. Like so ESG is just it stands for environmental, social, and governments, right? So that they could just pretty much investing it, pretty much own it, which they're pretty much doing anyway. Just not as ESG. I just assume they just outright just buying out the companies anyway. But it's like they're just pretty much having full control of everything, like water, gas, like everything you could think of that we use for our daily lives.
Soldiers who had just surrendered. See those bodies there? It comes as a ceasefire, appears to be even further away after Trump's 2-hour call with Vladimir Putin.
Amidst all this chaos, one name keeps popping up: BlackRock. Why is BlackRock, a Wall Street giant, so deeply involved in what's happening in Ukraine? Why do Larry Fink's fingerprints seem to be everywhere?
Well, who's interested in Ukraine? Now you have Larry Fink, who's the CEO of BlackRock, who is currently discussed as the likely individual whose organization, BlackRock, will rebuild Ukraine whenever the war ends. Gosh, that's interesting. Have you ever heard of anything like that in the history of the United States, where we went to war somewhere and we knew that when it ended, we knew exactly who the corporate head was who was going to lead the rebuilding effort, and we had set aside $1 trillion for the purpose? Hey, stop and think about that.
Only months into the war, Larry Fink had already personally struck a deal with Ukrainian President Volodymyr Zelensky. placing BlackRock at the heart of Ukraine's post-war reconstruction. $1 billion already secured from global donors like the...
So that's crazy. So they did the war. Now, with everything getting destroyed, guess who's going to own all the buildings? You know, like who's going to own all the infrastructure in Ukraine?
World Bank, all funneled into a new BlackRock-backed Ukraine Development Fund dedicated to rebuild the shattered nation once peace arrives. But why is a profit-driven Wall Street giant suddenly so eager to rebuild a war-torn country? Is BlackRock genuinely a Samaritan extending a helping hand? Or is there something darker beneath the surface? A strategy that exploits desperation to feed a much larger ambition? Truth is, this isn't really about Ukraine. This is part of BlackRock's grand master plan, a $68 trillion play to dominate the future of infrastructure.
When asset managers just invested in financial assets, what they did was actually pretty far removed from our daily lives, the daily lives of most individuals. But once asset managers are owning and controlling the houses in which we live, the roads on which we drive to work or pay tolls, the hospitals in which we're being treated, the schools in which our children are going to school and so on, then they potentially have a far more significant and far more direct impact on the daily lives of large numbers of people than they did back in the day.
In simpler terms, when BlackRock only dominated the ETF market, their influence had clear limits. But now, with their eyes set on infrastructure, the stakes have never been higher, and their impact never greater. And Larry Fink is just getting started.
We believe infrastructure is only at the beginning of a real major asset class. There are some structural demands that are going to increase the issuance of more and more infrastructure.
Structural demands. This is just corporate speak. What Fink really means is this. By 2040, the world needs $68 trillion in infrastructure investment, $2 trillion in ports alone, and BlackRock is setting itself up to secure as much as possible of this gigantic pie.
They want investments that are in the hundreds of millions of dollars at once, and that are long-term structural. So clearly infrastructure fits within that.
Across the globe, infrastructure, roads, hospitals, water systems has traditionally been controlled by public institutions, but increasingly it's being handed over to for-profit giants like BlackRock. And for them, it's the ultimate prize.
It's not like you have a lot of competition for the one international airport at your major city in a region, right? You buy that and you have control of it, and it's a monopoly. Similarly with water infrastructure, once you buy it, it's yours, right? And there's no way somebody's not going to open up a new.
Yeah, see, that shit is crazy. It's like Larry Fink's been playing Monopoly his whole life. So by like they're gonna own all the ports. They're trying to own all the water infrastructure, hospitals. So like that's the goal. Like, that's what they're trying to do. So imagine if they're able to accomplish this, and this is what's happening behind closed doors that nobody's really paying attention to. Like you go into a hospital that's owned by BlackRock, roads you're driving on, BlackRock owns the roads. You know what I mean? So it's crazy shit, man.
Water and sanitation system.
And the beauty for the owners is this: no matter how dramatically prices rise overnight for water, heating, electricity, or transportation, people have no alternative. Infrastructure delivers stable, long-term returns because people can't opt out. No one chooses where their water comes from or which canal ships their goods. You can't choose a different tap for your water or switch airports for your next flight. And nobody is building a second Panama Canal anytime soon. Whoever owns it has effectively secured a regional monopoly and gets to reap all the profits without having to worry about annoying competitors. A textbook example of what makes infrastructure investing so attractive. It's an invisible lifeline for everyday Americans. Any disruption to it, and prices for electronics, food, and fuel could skyrocket in no time. It's the world's most critical trade route, and now it's back under American control, the Panama Canal. In March 2025, a $23 billion deal is announced to place Panama Canal ports back under American control. And the Panama Canal deal is more than just symbolic. It's a massive milestone in BlackRock's quest to dominate global infrastructure. Because the deal is spearheaded not by Washington, it's led by Larry Fink, a man with close, long-standing ties to President Trump. If the deal goes through, Panama Canal's critical ports, Balboa and Cristobal, key global trade choke points, will soon sit firmly under BlackRock's control. But this isn't just about ships and ports. This is about who gets to own the bloodlines of modern civilization and the consequences of letting a private corporation this big take control.
This game, you're not ready for.
Let's say a municipality sells its water infrastructure to a firm like BlackRock. In return, it gets an upfront payment and a long-term service contract, often 20 or 30 years. And the new owners promise to take good care of the system. But here's the twist. Will the new owner really care if your water pipes corrode? Will they keep their promise to maintain the system or just happily collect dividends?
Obviously, regulators need to make sure that that the deals that they cut, where the private sector is involved, are fair to the public, right? That the public and the taxpayer isn't getting ripped off.
And what the asset managers learn too is that they get these really long-term contracts. They make all kinds of promises. And whether or not they deliver on them or not is partly irrelevant.
And there's no real incentive to do it.
What purpose, what reason could you have for enhancing or improving infrastructure when you're nearing, the last 5 or 10 years of a 30-year contract? They just have little to no interest in actually maintaining essential infrastructure in the interest of that community. They have an interest only in that infrastructure to the extent that it matches their profitability expectations.
This isn't just theoretical, it's a global pattern.
I mean, from looking around at the implications of 30 or 40 years of this tendency of selling off essential infrastructure and then it crumbling, and then the public sector having to either renationalize it or provide a bailout or preferential loans or allow the private provider to dramatically increase user fees. All of those are coming to play around the world.
The United Kingdom provides a well-known example where the public paid the price. Water privatization there has been a catastrophe. Not only is the water more expensive than in neighboring countries, it's more polluted because maintenance investments didn't happen. Profits always came first. But now that we've seen how infrastructure works, let's look at how BlackRock is executing its $68 trillion game plan.
From agriculture to AI, BlackRock owns everything and still keeps...
While it's the most popular claim about BlackRock, it's not entirely true. Yet. But in January 2024, they came one step closer to making it a reality.
U.S. investment giant BlackRock has agreed to buy Global Infrastructure Partners, or GIP, for about $12.5 billion. Now, the deal is the firm's largest acquisition since its 2009 purchase of Barclays Global Investors.
The crazy part about this shit is it's all public. You know what I mean? It's they're not hiding anything. When he does these interviews with Bloomberg and all of that stuff, he tells them exactly what he's gonna do. So it's not like Larry Fink is keeping anything secret. He literally is telling us everything that they're gonna do.
Putting the asset manager on a path to becoming the biggest provider of exchange-traded funds.
While the deal made some waves, only Larry Fink and a few select people could know that this deal was part of a much bigger game plan. The deal instantly catapulted BlackRock into one of the planet's largest infrastructure owners, directly controlling about $150 billion worth of critical global assets.
Any big deal, there's got to be an imperative behind it. From BlackRock's point of view, why do you need this deal?
Well, we know the corporate answer already. There are some structural demands for infrastructure, but this is the moment where you have to pause and think for a while. The more you think about it, the darker it gets. Structural demands. Ongoing wars and global conflicts are leaving infrastructure around the world in ruins, creating enormous and enormously profitable rebuilding opportunity. As a former World Bank official who declined to be named puts it,
it will be big enough to take on the big restructuring projects that will emerge from the Ukraine and Gaza conflicts.
Regions torn apart by violence will urgently require airports, roads, bridges, and power grids rebuilt once guns go silent and peace returns. BlackRock's infrastructure bet is also precisely targeted toward those inevitable post-war investment opportunities. Right after the bombs fell in Ukraine, Larry Fink moved fast. Now, BlackRock is the gatekeeper of the entire post-war recovery. One of the biggest reconstruction efforts since World War II, and they are holding the keys. But Ukraine is just the beginning. It can be seen as a test case, laying the groundwork to prepare the firm for future large-scale reconstruction opportunities worldwide. With every new global conflict looming, reconstruction needs and thus profit opportunities are booming. Each area devastated by war creates another set of airports, bridges, railways, and digital networks to rebuild. Each is another catalyst for the $68 trillion infrastructure gold rush the firm is targeting. Larry Fink wants to make investing in infrastructure the next big thing, just as he did it with ETFs. But if that wasn't enough, the whole thing is getting even sweeter for him. Public money is helping BlackRock. This is what finance professionals call the catalytic capital strategy. It's the dream for any investor.
If we continue to give them public money to ensure that they have no risk and generate high returns, of course, they're going to love it. Why wouldn't they? I mean, it's the perfect scenario where they go and tell the government, we want to, invest in whatever that disaster or problem is, or reconstruction. You just guarantee our returns. Wonderful. It's the ideal scenario.
BlackRock's goal is clear: encourage private capital to flow into war-torn regions, despite ongoing instability and risk. It seems like a win-win situation. While a destroyed country like Ukraine can expect a healthy influx of money once the war ends, BlackRock has enabled investors to profit from post-war rebuilding with limited risk. And some praise BlackRock for attracting much-needed investment into war-riddled countries in desperate need of capital, but others point to uncomfortable realities.
Do you think there's a motive of others to have war because now they can raise money and come in and build infrastructure and make more money? Do you think there's profit as a motive to have this war and continue the war?
BlackRock profits indirectly, but significantly from ongoing global conflicts through massive holdings in defense companies already. Through its index funds and ETFs, BlackRock holds massive stakes in some of the world's largest arms manufacturers.
Yeah, so think about that, right? They control, like
significantly from
they literally profit when there's a war, and they also profit after the war, right? So you could just see here, like military, you see the military contracts, nuclear weapons, right? So when these wars are going on, guess who's making money from it? And then when there's so much destruction at that country, guess who gets the funding to rebuild it? And everything is backed by the US government when they do it. Like, it's freaking crazy, bro.
Billions in Lockheed Martin, Northrop Grumman, or Raytheon, just to name a few. These firms directly profit from increased global tensions as wars drive demand for fighter jets, missiles, and bombs. Critics have accused BlackRock bluntly of making a killing on killing, profiting twice, first through the weapons that feed wars, then again through lucrative reconstruction investments. BlackRock, of course, rejects the charge. They insist we don't pick winners, we just track the market. If defense firms show up in market tracking indexes, they're just along for the ride. And with only 5 to 7% stakes, they claim they've got no real say in how those companies operate. Yet, as BlackRock's prior aggressive stance on ESG proves, if BlackRock wants to take influence, they can most certainly take influence. And BlackRock's new role in infrastructure will enable them to potentially take more influence than ever before. The question remains how BlackRock will use this power.
You cannot deliver profit maximizing infrastructure and expect that to also respond to social equity concerns and universal access. If they want this win-win situation where government, society, and corporations will all win, right? But that's not what's happening. The only winners are those who are taking home the profits.
While BlackRock's intentions remain debated, one larger truth stands clear. Larry Fink is building something unprecedented, a kind of everything store for investors. BlackRock now offers opportunities in every conceivable sector, from controversial defense and surveillance technology employed by authoritarian regimes to renewable energy pioneers or post-war reconstruction projects. Whether countries move toward peace or sink deeper into conflict, BlackRock's vast financial network is structured to profit either way. While some demand more regulation or greater accountability for the world's largest asset manager, at the end of the day, BlackRock is doing what they always did. They only respond to one thing and one thing only: the flow of money.
I don't think that they arranged the war, but they're definitely use its results, that's for sure.
All right, guys. Yeah, hopefully that was helpful, but that shit is crazy, man. When you really think about it, it's like, damn, like nobody really knows this stuff neither, So, like, even though like a lot of people watch the videos, but especially in the trading space, like people don't pay attention to this stuff. Majority of people don't know what's actually going on behind closed doors. So, all right, guys. Hopefully it was helpful, and I will upload the video soon. And yeah, see you guys for tomorrow for Bible study.